To Fun Friday. What's going on, everyone? I hope you're well and doing great. Happy to be here with you all. Thank you, everyone, for the support yesterday, the well wishes. Really grateful for each and every one of you from the heart. Really, really, really thank you so much. Listen, the real story. That's what we're about to get into today. A lot of concerns over here voiced just yesterday, right? Some bear market signals potentially. Bear market signals are flashing. Well, like for example, closing under the 50, the weekly 50 EMA, and that could be this weekend. And some people say, well, you know what, that's true, and like this is very good, very aware. Like sometimes you want an extra week for that confirmation, and we're going to take a look at that. I know a lot of people are really bearish. A lot of people are thinking that it's done. By the way, we're coming close right now to our first technical breakdown on the NASDAQ since recovering from the April lows and making the new all-time highs. And this is the first time we've one time, two times, and now the third time we're coming in for a test and a close below that. That will be a technical breakdown. And I don't wait for two closes, one close below it. And if you get back above it, then, we look for the repair. That would get us back neutral. We look for a repair out of it. And yeah, market's under pressure. A lot of people are bearish. Peter Brandt is saying S&P 500, the highs are in. He's saying signs the highs are in. Signs for 4 or 5 years. Guys, you saw that yesterday. Elon was able to get the shareholder vote for permission to basically not get ousted by shareholder votes in the future. Like he's legitimately worried, not about the pay package, not about the money. He's worried about creating an army of robots that someone else will get control over. Crazy times that we live in. And you know what? What is that the economy? Some people say that the economy is becoming the amount of compute and the amount of robots, right? Now, a lot of people are bearish. They're looking at the job market. Not whether or not there's an improvement that we're going to see in the job market, like we saw a sign of through ADP payrolls this week, or we'll have a legit stabilization and then improvement of it. If that's gonna, I was thinking this morning about in Mexico how many people make a living by being a driver, and not just Ubers, but a lot of other people just being a driver. And what's going to happen once automation is that, guys, what would you rather, be at the hands of a drunk driver, which I don't know how many fatalities it caused a year through drunk drivers or people driving under the influence, or would you rather be trusting the algorithm? It's a question that needs to be asked. I go with what's safer personally, but the truth is that, you know, what's going to happen? This was a great question that was brought up. This one right here yesterday as we get in. And I want to get into it. So we're going to get into it all in 1 second. Let me come back over here 1 second. But this is like, could someone explain to me who's going to be providing the universal basic income? The US is bankrupt. How are they going to do that? Powell and the printer. Right? AI companies are the only interested in profit, for sure. These are not humanitarian projects. OpenAI, which was a non-for-profit, went full-on profit, right? By the way, did you guys see, this is kind of irrelevant and important, that that David Sachs said that there will be no federal bailout for AI. The US has at least 5 major frontier model companies. If one fails, others will take its place. This is great. Well, first of all, I don't know if that's true, in so much as that, like, if the US, they're not going to bail anyone out, but they might become shareholders, right? We saw that recently in not just Intel, but other companies as well. And that could be semantics, whether it's a bailout or it's an investment. We don't know what that is. But the truth is that this provides a little bit of fire, competition. We like competition, right? You got to be the best, and we like that a lot. Peter Brandt is bearish. Thank you, brother. Peter Brandt is saying there are signs that this could be for 4 or 5 years. I guess what I was trying to weave in there is, do you believe that during this era of the Fed is about to be easing, not about to, the next step, like the next step of the Fed cycle that we've been talking about was the end of QT and then the balance sheet rising. We're not even there yet, but we're getting very close to there, right? QT expected to end less than a month from now, and expectations are that balance sheet begins rising. There's going to be lots of arguments about, is that QE? Is that not? It doesn't matter. The balance sheet's going up. And then the next phase eventually of the Fed cycle is going to be when they have to return to outright QE. And they are going to eventually be easing into the bubble. And, but Peter Brand saying 4 or 5 years, pointing out gravestone doji, S&P 500 on the weekly, and then an exhaustion gap, pointing out the Hindenburg omen signals, and then pointing out the exhaustion gap. You can see it here. The major gap up, can't hold, price comes down. Am I bearish? Have we seen those before? This is a recent one over here. Here's an exhaustion gap, right? Can't hold, filled. Price corrects 10, 11%, and we're higher. Listen, this is also a good one here, and this is really important. And this is like Brownie Brown is like, listen, like we can't get comfortable. There's no truer words. There's no and this is not a cop out. This is the truth. Like right now, during this uncertainty, my signaling was off by a few weeks about the bears in the background. Listen, the truth is we have one position open in our stocks, and it's MicroStrategy, and it's short, and the rest of the board is cleared, and we're just on the sidelines waiting. And then when it comes to Bitcoin and crypto, I mean, Bitcoin Bill Runs has exited the market. It's been out of the market. Ethereum is currently short, and Cardano is currently short. And for sure, there's no time to get comfortable. And you know what? This might be a great lesson for a lot of people, because when price is up and to the right, it's what I call like everyone's an expert phase. And then when all of a sudden, things aren't so easy to navigate, the importance of having a plan that over time is going to not only keep you ahead, but keep you significantly ahead is absolutely priceless. How many Microsoft, how many MicroStrategy, I guess they might as well combine with Microsoft. I'm in the macro hard camp. Should the subscription fee to be part of this community CTM is made low on purpose so that everyone could be included, anyone that wants to. The value, like, forget that, how many micro strategy investors would have saved themselves a significant amount of money, not even a significant amount, a massive amount of money, and you don't know what's going to happen next. Unfortunately, that will come. Question was asked earlier about V4 and the release. We'll wind up with that at the end. We'll talk about it because I wanted to pick off where we were yesterday on this chart, but I want to continue right now and just get into what's going on here. A lot of people are bearish. No question about it, right? A lot of people, recession 2026. Bitcoin, some people think may have one last all-time high in it, 130, 140. That would be the end of the bull market. And maybe it doesn't. And how do you know? If you have no overextended like sell signals, any metric saying that you're overbought, and like, are you exiting? Like, do you wait for that next leg up? Are you exiting on the break of the 50 week EMA, the weekly 50 EMA. Price right now is definitely challenging it, and you can see that it wicked below it, right? And it wicked below it, of course, a bunch of other times recently, which is why that I think that the awareness of saying, listen, it's not just I'm sorry, I was trying to find it. Is this one? Yeah. Like two closes below. Are we so as far as being bearish, Bitcoin, MicroStrategy, like MicroStrategy, like I was super bullish here. So bullish. This was our, double wave off the ramp setup. And we got out like, I think it was like 5% profit. It just didn't take off. And then we were on the sidelines. It's not bearish or bullish. We're just on the sidelines. And then price came off significantly. And then another entry and a full stop loss, 6%. So between those two trades, you're down like 2%. And then since then, it's been short side. Like we're definitely involved right now. Momentum has not only turned over, no momentum is now obviously bearish enough that we're taking sell side trades. But I don't know what happens next. I don't know when that ends, and I don't know. I mean, this could be a liquidity grab. Taking out the low here, that could be a liquidity grab. A lot of people that don't have, they just put their stops down over here. Those are taken out, a quick recovery. And if you get like, draw yourself in a simple trend line, we could do better than that. There's a double black diamond in there somewhere. And yeah, you could easily be very soon grabbing that liquidity, bouncing and running. If Bitcoin's bottoming right now, and whether it is or we're going to take a clear look at it, then yeah, that could easily happen. So it's not about being bearish or bullish. It's just knowing how to position around momentum, which is critically important, because once you take the guessing out of the equation, then all of a sudden, it's a different game you're playing. Long side stop is much smaller. So thank you, Ace. I was saying 6.7. Yeah, thank you, Ace. Ace is like always as sharp as could be. So 2.81. So out of those two trades, correction, you're slightly up. And then since then, it's been attacking the short side. And yeah, so we're bearish, but only right now because we're in a sell side position. Look, that could all change very quickly, or not. This could escalate a lot further. Let's take a look though, like a genuine look, and I suppose there's two ways, and you could say like if price closes below the weekly 50 EMA, that's a sign that, and it is a sign that things are going the wrong way, that things could become bearish. Now, it's not that simple and it's not that easy. Or you could use for sure, because if you're using the one, I mean here you're going short or selling. We don't close below it, so that's good. Here we'll look at both. One close below, and then a second confirmation close below. And for sure over here in this area, you have two closes below. And then no big deal. You wait for two closes above, and then you have two closes above, and that's just a quick flip flop, and it's not really a big deal. Like, that's good, that's safe, and let's say that is, just so I know what we're talking about here, an 8% stop loss. Okay, you flip flop, you're long, and you're long until this day. So that works very, very well, right? In this situation over here, right? Now, here's the thing. You would have went short here. This is either your first close. Oh, this is only one close. So if you're using one close, you went short here. If you're using two, you do not. You do not even flip position short over here. Okay. And if you did close on the first one, then that's a small, it's a little bit bigger than 8%. No big deal. What about over here? This is in 2022. This is your first close and two. You're short no matter what, whether you're using one or two, and they're relatively close. A small flip flop, no big deal. It's a small loss. You're on the right side. It's no big deal. And then you have two more. You closed, and this one's great. You protected yourself a long ways over here, and then you are just getting long over here, and you had that small flip flop since. That's worked out fantastically. Right? Now, over here, not so much. If you close on the one, you're good. You close on the one, and then the first one above, it's just a small loss. If you close on the two, this is just, you're wrecked, right? So could you use a second? And this is just the warm up until I get into my view of what's happening. That's a 63. You're wrecked. There's no question if you're using the second confirmation. So not so easy. Not so easy at all. Over here, by the way, this one worked out probably pretty well. Whether they're the same, one or two, and then you take a loss. It's not a small loss. So anyway, there's a lot of, even when it looks good, it's not so good, is it? It's a 20% plus loss. That's not so good. And then, if you come back over here and you have two closes above, that one holds all the way. Unless you're doing the one game, then you're getting ripped up on flip flopping. But if you're doing the two close, that's good all the way to up here. So that's actually a small loss also. It's not really working out. It looks a lot better when you just look at it and on the chart. But when you start actually back testing it, doesn't really work out as well as you think it does. Yeah. So here's the problem though. Right? So would I say that trading below the 50 EMA is bearish? Yeah. Would I say that it makes a lot more sense to be able to, not wait for the break of the 50, but, get out over here and on the sidelines? Yep. That seems a lot more, let's say, just navigationally correct than waiting for all the way down over here. And as far as momentum to the upside, well, that momentum rolled over a long time ago, and we were way ahead of it. And yeah, we're trying, taking shots on the short side, over here, and that could continue. And if you look at V4, and before I get into V4, I mean V4 is still short here on Bitcoin, 8%, on Ethereum 6%. And then the last trade on Cardano is running against it, minus 3.9, but it's made profit this whole way down. So yeah, like ahead of the head of the close below, momentum's already rolled over. You're a little late, I think. And well, our positioning, our momentum shows that you're either neutral on the sidelines or attacking on the short side. So 50 EMA, well, I guess no, it's not really a good indicator of what side you should be on and when, whether you're using one close below or two closes below. And check this out over here. I think this is important just to look at Amazon. And the reason I say that is because I compare a lot this fractal of what's happening. And the purpose of the fractal is not to predict price at all. The purpose of the fractal is to show that assets undergoing S-curve adoption, that three things are happening. You are seeing, first of all, diminished volatility. You have the hype phase where there's the massive volatility. You have the facing reality phase where there's still a lot of volatility. And then you enter into the exponential walk-up phase. And there is reduced volatility to the downside and to the upside, which is going to bookmark that for when we come back to this portion of the conversation, because we've entered into that particular phase where you see reduced volatility. You could see the massively reduced volatility in Bitcoin since. And yes, the whole premise is that is going to continue. Now you don't know, and I don't know whether or not this winds up being correct. I sincerely believe it's going to be correct. And not only that, I do believe things like the power law are going to be proven wrong on the upside. And what I think happens is that, just as you see here on this fractal, eventually you walk towards the top portion of the trenches. And that would mean Bitcoin walking towards the top portion of the trenches. And I do think it's likely within the next 4 or 5 years that it happens. Oh, sorry, I shouldn't even say 4 or 5 years. We're almost in 2026. Let's say 2 or 3 years until that happens. That's what I personally believe. Now, with that in mind, and just if I am correct in so much as the evolution of Bitcoin and its S curve adoption. Here's a chart of Amazon, which went through that already, and you can see it Amazon happening over in this area, and quite amazing. Both of them saw that reduced volatility over here, which never happened before. The structures are so crazy similar. Here's Amazon and here, like, what happens if you were just following the weekly EMA? And so here's one close below, and here's two close below. And by the time you get back above, I mean, that doesn't work out, right? What about over here? On one close below, you get wrecked. If you use two closes below, you're safe. This is just a peak below. Here is one close below, two close below, small loss, no big deal. Now you're long, small loss, no big deal to the downside. And this one saves you, right? If you position over here, unless even if you do one, it's a small gain. And if you're doing two closes, that's a big gain. And that really saved you that one time, right? Now come back over here, back to when Amazon, and by the way, let's not skip this one. If you're doing one close, it's a small loss, no big deal. If you're doing two, you're protected. Same here, just flip-flopping, no big deal. Doesn't seem like such a great strategy, but it works. And here's an area of the price action that I believe that we're more inclined to experience. And where are we? Are we somewhere over here? It looks like we've passed through. This is the similar situation of the PA. When I say that, let me just jump over here. Like, here's that first drawdown, second drawdown on Amazon, which means that this is the second drawdown. Like, are we here right now? And people calling a bear market, and I'm not trying to say this is where we are. I think this is entirely different. It's massively different in so much as that right now we are in an era of fiscal dominance. Right now we are in an era where the Fed is pivoting, why assets are right off their all-time highs. And if usually when the Fed has to pivot to outright easing, that's like, assets have been rocked, NASDAQ off, 30-40%, Bitcoin in the past off 60%, but not near their all-time highs. It's significantly different from where we are right now. And well, by the time they return to outright QE, who knows where we are? Are we going to be significantly higher or lower? We can't really answer that question right now. Even over here, though, here's some breaks of the 50 EMA, and it winds up not being a bear market by any means whatsoever. And same thing over here. This is not a bear market whatsoever. And I guess what I'm trying to do is just say, well, using the weekly 50 EMA is much like M2. It's poor at best. And you remember when everyone was posting all their M2 charts, and that's when I put out the thread, and I was like, M2 is a lagging indicator, which is poor at best. And this is nothing more. Like the weekly, 50, is it a reason to be cautious and bearish? For sure. Are the things that Peter Brandt pulled out a reason to be cautious? for sure. There's no question. Is our positioning reflecting that? Absolutely. A- Absolutely, right? We are right now only holding short side positions. Now the thing is that we don't have to get tied to that. How quickly and nimbly we're able to move with that momentum. We could go from attacking the short side and then a week later being on the buy side, and within 10 days, 2 weeks, being fully positioned on the buy side. That's You saw that happen off of the 2020 into the 2023 bottom. We were attacking short side for all year, and then all of a sudden up and to the right. All right, so that's where we stand. For me, nothing has changed as far as, you know, do I foresee the top is in, and there could be lots of yeah, let's say this. I think that we have a lot to get over here, and there's always a wall of worry. One of the things that I'm most concerned about is what happens with the Supreme Court ruling and the tariffs. And it doesn't seem like we're getting an answer anytime soon to that. Maybe the markets don't like that uncertainty. I'm not really sure. This reminds me of this though, and it is what it is. Look at the 1998 fractal, and look right here, that massive dive, and then by the end of the year, you're off to new all-time highs. Could that potentially and possibly be in the cards? I don't know. I think it's my base case. But look, we get a breakdown, and a breakdown for us right now would be a close below this line. Yeah, that's a breakdown that we have to repair. First, getting back above it would be the earliest sign of neutral. And then from there, it would be a trend line break. Like a repair would not, we would need to break above there. And then that would be a very strong indication that the correction's over. And by the time, if that happens, if there's any downside acceleration, right? And then I have the next level, the previous all-time high, and then the area below that. All those things are on play if we get a close below without getting a repair first. Does that mean to me that we're not going to see a new all-time high for 4 or 5 years? Absolutely not. It's not the way that I'm seeing things whatsoever. But like it when yeah, a very true not that one. Do not get comfortable. It's not even like criticism. It's so true. Like we can't get comfortable, but we were positioned a lot more comfortable ahead of all this. I was cautious in September and October, both of those months, and our positioning was very bullish and favorable, even though I was so cautious. And I thought we were going to get chopped up, meaning going to drawdown during that period. We wound up pushing ourselves a little ahead because of the stock trades. And in this particular period, we just took some hits on FNGU. We just took a hit on Nvidia. TQQQ, I don't know how it didn't enter that trade. And a lot of us are like, oh, we have to look at this. A lot of us are like, oh, why is the ST2 filter keeping us out of the TQQQ? Because it just wound up. In retrospect, well done. Well done. That's all you could say. Great job. See, absolutely. It's so like, and the thing is though that, sorry, I was doing here. Well done. You couldn't see, but the ST2 filter kept us out, and for good reason. Listen, it is by far our worst performer, and it is by far better than any other fund manager out there, right? Listen, let's just jump back to over here. And do I think this type of PA percent? Do I think that we're about to see an era of no new all-time highs for 3 or 4 years? I mean, Stanley Druckenmiller 2 years ago thought that's where we were headed. And even though he thought that, it doesn't make any difference. All that matters is how he's positioned and how he's growing his family office funds. It doesn't matter what his expectations are. Was Stanley wrong for having those type of expectations? Maybe he missed the. I mean, let's time out. For the last 60 years, his whole premise would have been correct. Did he miss, maybe because his whole life and career has been under one regime? Did he miss the move into fiscal dominance? Maybe. Does that matter? Or all that matters is how he positioned himself? Yes. All that matters is how he positioned himself. Was he late to shorting the 10-year? Probably. Was he early in selling NVIDIA? Probably. Does it matter? He's basically retired. I don't think it really matters. Is Peter Brandt correct in looking for the next 3 to 4? I think that's a little sensational. I think he's looking for a little bit of whatever they call clicks and views and whatever. I think maybe he believes that. I'm sure he's had some great calls in his career. He's been around for a long time. Some great calls. Either if he hasn't had great calls, he's had some bad calls, but he's had some great calls, I'm sure. And more importantly, it just matters how he trades his account. Is it conservative? Doesn't matter. Like, but do I think that we're headed towards? No, I think there's a good chance by the end of the year we hit a new all-time high. And if not, I do believe in 2026, Bitcoin is trading higher, significantly higher than it is today. Now, well, here's the thing. This is a great question. And since we're talking, I don't look, the difference in these two have been tremendous. This is the white is Bitcoin, and the hype phase of Amazon was significantly greater, as was the beginning of the bust and facing reality. You thought that this was a big drawdown, this 85% drawdown, you know, hold my beer. Amazon's was way harder, and it's uncanny out of it. Yes, they both, the peak of Bitcoin is much more exasperated to the upside over here, but they peak at the same time, and then there's a big like differences over here. They're so similar, but they're so different at the same time. Even over here, Bitcoin runs up in June when the Fed stops QT right before the global lockdowns, and Amazon was going the wrong way, and they both have this event, which is so weird. It's just weird how similar and different they are. It's so similar, but very different. So you can't use it as a guide, I don't think. They both have, look at this, Bitcoin running up, but Amazon wasn't in that area. And then Amazon's, drawdown here significantly greater. And so the only thing I think that likely plays out very similar is I think that Bitcoin runs into a situation where it breaks out of this upward sloping channel, right? And like Bitcoin breaking out to the upside here, or maybe it's a little lower. Maybe it's breaking out right over here on this new channel that we have. Bitcoin breaking outside of an upward sloping channel, I think leads to something that will look like this on the upside, where it won't be like a past, like rocket in Bitcoin, but there's going to be that upside quick move, and then it's going to enter into what is going to be that mean reversion. And I think the drawdown is going to be at least 40%. And it could be 50%. I don't think it will be 60%. 60% is much. I don't think we go beyond that. And I don't, and I think that that's going to be the similarity that we see. And, so when we break out to the upside, that's when I'll be looking for it to occur. It's not up only. And Amazon was not up only during this period either. And it's very important to see, like, let me zoom out. Up until recently, and Amazon had this great moment here during the lockdowns when everyone was investing in Amazon, and because of that upside move, it had a greater mean reversion, and that 55% drawdown on Amazon, which it's now recovered to fully, was the biggest drawdown it had had in about a decade. Here's a 35% drawdown. Here's a 31% drawdown. Here is a 31% drawdown, and it has multiple 35%, just like Bitcoin has had in the past 3 years. It has had multiple 30% drawdowns, and that's going to continue. And there will be bigger ones ahead, but those bigger ones ahead likely come after accelerated price action to the upside, right? And that doesn't have to look as big as this one was. This biggest one led to the biggest drawdown, right? It could just be something like this: upside, mean reversion, downside, bigger drawdown. And that's not up only. And same thing in Amazon. There are very few people, Bill Miller did, there's very few people outside, that held on to Amazon through one of the greatest runs. Very few people. And most people, what they were doing was on those 30% drawdowns, they were exiting their position, exiting their position, exiting their position, right? And the wrong time when they should have been accumulating. Is That's not up only or anything close to it. It is diminished volatility. Amazon had some wild volatility. Wild volatility. It's diminished, and it is an exponential run, and it's a walk up. That's not up only, unless you're able to, like, close your eyes for the next 10 years. Then it will look like up only, but no, not at all. There's going to be, like, if this does occur, and right here on the close of the close below the 50 bear 4-year cycle, bear market 2026, and then in 2026 we're making higher high. Well, there was going to be one more, and instead of coming in the fourth quarter, it's coming in the first quarter of 2026. This is, the one high, and now the bear market. So now we're exiting, and that doesn't happen. Guys, this looks like alt season all over, where people, instead of invested in Bitcoin, decided they wanted to take some shots, and they get left behind. And I think that is it's a much greater risk than if in 2026 Bitcoin has already topped and we go into a 40-50% correction. That's not a risk. That's a chance to accumulate. And things like Bitcoin bull runs will be entering back into the market. It exited at 111,000. It will be entering in much lower if that were to occur, and give people the opportunity. I have no idea when a top comes. Listen, who's going to win the election? The midterm elections in the US in 2026. I have no idea. Is that going to affect the markets into the end of 2026 and 2027? Tremendously. Tremendously, it will affect markets. I have no idea when that's going to be. Are we going to see a slowdown in AI investments? Look, we're going to continue, as we just did, watch for one, and any signs that we could be entering into uh, a bigger, larger correction. If that were to happen, that's going to kick it off. But look, they were just told, like, listen, there's no federal funds coming. Whether that's true or it's not going to be a bailout, it might be an investment. But the piece here that is, look, there's 5 other companies you're competing against. Make sure you win. And do you think that Zuckerberg, reading that quote, is going to be like, oh, it's time for us to back off our spending? Do you think that Google's going to back off their spending? I don't know what Sam Altman's going to do. And by the way, Elon is absolutely crushing it. And Elon is crushing it now, producing his chips here at home. The advancements of those chips year over year are going to be absolutely insanity. And yes, the robots are being. Is this a time where it looks like spending is about to get cautious and or come up? Is this going to be a time over the next year and two and three where like this becomes an enormous issue? Yeah. How, people like this is not gonna be good. Could you imagine graduating college right now and you're looking to enter into the job market? What like that's not it's bad. It's really bad. And that's gonna continue. That's not gonna get better. And these robots and this automation is going to replace Tesla's running out semis. Those semis are going to also be automated. Like the transportation in the US is the largest job sector. Well, I don't know how this is going to, but like, and I don't know what you want to call that. Like, is that the economy? Like, are these companies going to stop spending and are we going to see their like I don't know. I think calling that and also I'm just giving you one aspect here. There's another huge aspect, right? The amount of passive investing and each and every week, the amount of money that goes into those passive funds to people, and each paycheck putting money into their retirement accounts. You think that that's about to come to an end right now? And true enough, it is stimulative maintaining these deficits. Do you think that's going to come to an end right now? I don't know. V4 though is, you know, right on time. In so much as this is that, and this is 2 years, 2000 and yeah. The Wizard joins us right here in January 2023, and we're so skeptical. There's no way we're sharing any IP by January 2024 is definitely lead dev on the team, and 2 years of that's not even 2 years. Yeah, it's 2 years. 2026. Moving from V2, V3, and V4 now going to be rolled out into the latest release. And if I am correct, and that we have entered into this new regime, that this is going to persist. This type of lower volatility will, and there'll be the times we looked at where you rip to the upside and then therefore mean reverse down. Like in those times, this will tick a little higher. It'll tick a little higher, but just during those little times. But most of the time, I think that we're in a new regime, and that's because of the growth of the asset in market cap and in investor. It's no longer retail speculating. And now you're looking at a different type of investor and of course a different type of market cap that takes a lot more money to move it. And by the way, it's incredibly bullish seeing gold's $20 trillion market cap moving like it did this past year. Unbelievable the potential of what Bitcoin is going to do Bitcoin things, and the power law is going to break to the upside. Now, rewind that all back, and well, if this is persisting, you know, like this is really hopeful, and this is the buy and sell side. And the truth is, look, if we're having this conversation at Bitcoin's 125,000, and we will have that conversation when Bitcoin, October the 7th, from the very bottom to the very top. And no big deal, Bitcoin at 102,000, but Bitcoin trades down to 80,000. This becomes a different conversation because now all of a sudden everyone's an expert phase is over with. And people realize buy and hold doesn't work. And you never know what is going to happen. I surely don't know what's going to happen. But let's go to that date. So right now you're looking at Bitcoin being able to with the buy and sell side. And this is starting. I'm not going back in like if we go into like from 2021, forget the 2020 bull market. Like at this point, the returns in comparison to buy and hold are forget it. But I don't like forget that type of time preference, right? Because now we're talking 5 years. But that does say buy and hold 255% to trading both sides 8,300%. But let's just start at the start of the bottom of this bull market. And by the way, I know that we called the bull market breakout. I know that most people understood we were in a bull market well into 2023 with price significantly higher. So even like people calling a bear market right now, did you see the bull coming? How come you see the bear coming right now? I don't know. I don't know. Um on the buy and sell side, that's a big difference, 922% to 556%. But what happens if it was buy side only? Right? If you're just trading only on the and in the past, especially for those in the US, it was limited. Today it's not with Coinbase's perpetual futures. And by the way, we're using 0.1% commission here. Coinbase's perpetual futures are in line with what like global fees, and they are significantly lower to what we have here for commission. So buy side only, and you're looking at, 645% to 556%, which is better. But the value is that that's up and to the right. You never know what happens next. You just don't know. If you're going off off another analyst on YouTube, maybe they're saying that we're about to enter a bear market. Why? I don't know. If we do, then these returns are going to look significantly better versus buy and hold. If we don't, we're still pacing them, and that right there it's. I want to show you from the highest point though. Let's see. There's like October the 7th. We said. That's picking the lowest point and the highest point, and you're still outperforming buy and hold. Is that worth 2 years of work that's been put in? Man, I don't think you could put a price on it personally. I don't. Is there another edge around that remotely compare? I don't. It's Providence. We are so blessed to have each other, and yeah, there's nothing easy about it. There's nothing easy about it. There's nothing easy about it. But you're here. Everyone, have a great weekend. All right, we'll come back in on Monday, and we're going to continue to work hard. That's where we get where we are. Bless you all. God bless you all. Have a beautiful weekend, everyone. I'll see you soon.